Mr. Chair, members of the committee, my name is Beth Padun. I represent the Minnesota Chamber of Commerce. I'm here in strong support of all three of these bills. We really appreciate the authors bringing them forward. Our concern is Minnesota has become more and more of a tax outlier in this area. We're only one of 14 states that still have an estate tax, and as the earlier author had said, other states are moving to increase the thresholds that still have this estate tax to match the federal level, most recently New York and I believe Maryland last year as well. We've been hearing as we go around the state more and more from individuals, CPAs, financial planners, attorneys, business owners, really on the detrimental impact of the estate tax in Minnesota. It is becoming more and more of a disincentive to remain in the state as well as to invest in Minnesota. I think you're going to hear further testimony on that, so I won't go into that any further. But as you look at our demographic changes, as you look at the baby boomers that are hitting retirements, this is when they're really going to be starting to make these decisions. And I think that's something that's really, as you know, we have static analysis on our revenue estimates. And so it's showing a revenue loss to the state. But I think when you look at the wealth potential of the out-migration of these individuals with the wealth that they bring in with them, that it really is a detrimental impact on Minnesota moving forward with the loss of revenues to the state, with the loss of their involvement in their communities, the loss of charitable giving potential for these individuals as well. And so we really hope that this is something that can move forward, that you can look on how we can match at least the federal estate tax threshold level. And we think that would be an important step forward, as well as just making our tax system much more simpler, as well as the administrative complexity of costs for the estate tax. Thank you.
Ms. Goodwin, your organization has consistently testified that the high taxes in Minnesota, as you characterize them, is responsible for out-migration from the state. And not just with the estate tax, but with business taxes. And I'm having a tough time justifying that with Minnesota being the number 2 in Fortune 500 companies per capita in Minnesota. And either you're just wrong, or B, our quality of life in Minnesota more than makes up for that in our homegrown talent. So why do we have nothing more than an anecdotal evidence that the suggestion that these taxes are responsible for out-migration?
There's a lesson I've always wondered about them. They say this bill, every dollar spent would get $7. They say heck, the full budget. I mean, you know, I think ethanol is $1 for 17. Ms. Padun.
Mr. Chair, members of the committee, Representative Lesh, appreciate your question on that. I think when you look at regarding our tax climate, there's a lot of factors that go into a strong business climate in the state. One is having good, strong infrastructure. And as I always said, we believe we also need to provide that at a competitive price. We've had some recent very large tax increases in the last 2 years, over $2 billion of tax increases that brought our individual income tax rate as well as our pass-through rate up to the 4th highest in the nation. We were able to repeal some of those taxes that we were having a more immediate impact, such as the business-to-business taxes, the gift tax that we were hearing just immediate concern on those as well. I don't think we've ever said as an organization regarding that that high taxes result in out-migration. We know there's a lot of factors involved in people making those decisions, but we do know there is some research that does say for those high marginal tax rates, especially for entrepreneurs and individuals, that they do have an impact on their decisions on where they're going to grow, invest, and have with their residents. So we do know there's some data that supports that. The other thing to take into account when you're looking at a tax climate and some of the recent tax changes that occurred, as well as looking around the country and some of the tax choices that other states are making and reducing their taxes, reducing their business taxes, and reducing their estate tax impact, is that a lot of these decisions are incremental. People don't immediately make a change. That they're now slowly kind of looking and getting some advice from financial planners and others on some of their decisions that they have. And these are things that are going to kind of play out over the next few years. And we're going to see that in some of our economic data as well, I think, over the next few years as well.
Sure. Okay. Let's go to Ms. Rupp. Ms. Rupp, please state your name and who you represent for the record, please.
My name is Stephanie Laitala-Rupp. I own a company called Owl Bookkeeping and CFO Services, and we provide, as you might imagine, bookkeeping and CFO services to companies in the million to 20 million range. We have 30 employees and are based here in St. Paul. We are a small business, working with small business. I grew up in a small family business. For me, the estate tax is less about transferring of the business or assets from one generation to another than being a competitive, vibrant state. My business is small. It's geocentric. The likelihood that I will move my business out of state, 0. The probability that I will sell my business and move myself out of state and start another one, more than 0. I have to tell you, a couple of years ago would never have even thought that. It wouldn't have even entered my head. I am born and raised here, my family's here, my friends are here. I'm deeply committed to the community. I sit on 5 boards of directors. I give lots of money. I volunteer my time. I am an unusual small business person. I get that. I am here, spending over an hour doing something I believe in. I am unusual. You want me in this state. But suddenly, if I were dating this state and we were in a relationship, based on some decisions that happened last year, I would say that you're doing I'm going to make this a little uncomfortable, so you'll break up with me instead. The business to business that was passed and then repealed because universally people thought it was a horrible idea. The 4th tier, the one thing that happened with that tax is small business owners took notice. They said, wait a minute, what? What are you doing? Holy cow. So when the 4th tier income tax passed, all eyes were on you. And even if they didn't hit that, the thing about the land of the free and opportunity is they aspire to hit it. People aspire to hit that kind of revenue, and they want to be able to do it, and now suddenly, not very friendly to be here. It doesn't feel like a place where I want to invest more of my time and money. One of the things we don't talk about in polite conversation and politically correct conversation is we need prosperous people for a state to work. We talk a lot about needing smart people. We talk a lot about needing educated people because we have some industries in our state that need smart, educated people, but we fail to make the connection that smart people often are compensated with money. Those two things go hand in hand. The hitch in the giddy up with smart, prosperous people is they have choices. Money buys choices. Those people who have mobile businesses and make a lot of money and stock options, they're already gone. This already isn't where they want to be. And in a world of perfect information that includes the internet, obviously they can choose where they want to go, and they're smart enough to do it. And smart people are in demand. Businesses and cities across the country will woo them to say, join our team, please join our team. This is incremental. Last year was the first time I felt maybe I shouldn't be a Minnesotan, even though I am a Minnesotan. These things take time. It takes time to sell a business. It takes time to decide to do that. You want to not rush into this. We talk about being Fortune 500 companies, but we haven't had one start here or move here in a couple of decades. These are all homegrown companies. This is good, but that's telling us something, that they're not choosing to move here, but they are choosing to move other states. Minnesota has become an incredibly expensive place to live if you are smart and therefore prosperous. And sadly, it's also an expensive place to die. We are one of 14 states that have an estate tax. The rest of the country has figured out that it's a bad strategy to ask the people with the most money to leave. We need to do that, and so I would prefer it be annihilated, the estate tax in Minnesota, but I wholeheartedly support the bill that's on the table right now to at least raise it to the federal threshold. Thank you for your time, Mr. Chair.
Thank you. And to the witness,